Rakesh Arora, who joins in on the show, founder GoIndiaStocks.com. Rakesh, thanks much for being with us. Let's get in a view as to, first up, what the outlook is on margins, largely on the cost deflation. How do you see the margins in light of the falling commodity prices helping the overall profitability? Because Q1 margins have been mostly at the bottom for the industry.
So I think margins will remain under pressure for Q2 and probably up to Q3 because coal prices have remained extremely high. There has been some correction in petcoke prices in line with crude. So that would help a little bit from Q3 onwards, but Q2 margins will be lower. But I think market is looking beyond this seasonal weakness that we are seeing because unlikely that coal will sustain at these high prices, whereas cement price hikes which were taken to compensate for all this coal cost increase. And remember, coal has gone up from 70-80 dollars to $400. That's a massive increase. So the cement industry has been able to pass on largely, but when coal retreats, I don't think cement prices will fall. So beyond Q3, I think there is a big margin expansion which is possible. But Q2, Q3 will be weak, and seasonally also it's a weak quarter for volume perspective. So, but market is actually already looking beyond it.
Than last year's seasonality, because like you said, look, there is a seasonality factor, but rain in Mumbai and monsoon in India, that happens every year.
Yeah, that happens every year. So, but coal prices are not up to $400 every year, and that is the major change. So there would be margin compression in Q2 and Q3. But nobody expects coal to remain at $400 forever.
Back in demand, and the fact that operating leverage would kick in if demand and capacity utilization goes higher, could that somewhere reduce the margin pressure?
That is true because fixed cost is still there in cement business, which is employees and other things. So EBITDA margin do tend to change with volume, but most of the cement companies take their annual shutdowns during this lean period. So the other cost, which is stores, repairs, and other costs, actually goes up in this quarter. So I won't really bet too much on margin expanding in Q2 and Q3. But I'm bullish on the longer term perspective.
Rakesh, to just ask a slightly more industry-specific question and a trend that we started to see a few months ago, which is, of course, to do with consolidation. I remember during COVID, Puneet Dalmia told Nikunj in an interview that the big will get bigger. The consolidation has started. Is this going to be a trend that you expect it to continue? We know about the Adani Group's entry. Kumar Mangalam Birla has openly spoken about a Mahakumbh for capex. UltraTech is believed to have been on, acquisition spree as well as shopping around. He's wanting to shop around. Is that a theme that you're looking at closely?
So, meaning, see, Adani has acquired a large capacity, which is a pan-India, and UltraTech is already, having grown and acquired his, like pan-India presence, and they have dominant market shares in most of the, regions. So, chances of M&A going through, CCI approval for these two large players who are likely to, consolidate the industry is limited. So I would say that for Adani, there's still space in southern India because Ambuja and ACC don't have too much of a presence in South India, and there's also a scope for them to consolidate in Northeast, where Ambuja and ACC are hardly present. So region-specific M&A can happen. UltraTech is actually present in most of the regions now, and for them it is even more limited, I would say. While there are a lot of hopes for M&A, I think it will take time. Adanis have just taken a big bite. They will consolidate their operations in Ambuja and ACC before they go ahead with more, acquisitions. And as I told you, which are the regions where they can do M&A. So, it's easy to guess which are the targets.
Do you want to tell us, guess for us or explain to us, because all of our viewers will not be tracking companies and the geographical locations as closely?
Okay, so meaning in southern India, there are two large capacities which are available. One is India Cement, and other is Penna Cement, where there have been some buzz, that they are takeover targets. So in South India, these are the two. Northeast, there are not many, available. They are small, fragmented. So, it's going to be hard work choosing and picking individual companies. But also remember that most of the cement companies are in good shape in terms of balance sheet. So some of the, promoters might want to hang around. So it's not going to be easy. I think it will be initially for Adani's, it will be more organic growth because, Ambuja had already planned for 100 million ton in next 5 years. So they go from 70 odd to 100 in next 5 years, just organic. Plus they have a large limestone reserves in Gujarat. So Adanis can actually exploit that, and they can and this is very close to Mundra, so they can actually utilize their port and utilize this limestone reserve that they have to cater to the whole of western and southern and eastern India through the port coastal line. So I think that should be the plan for Adanis in the near term. M&A would be very opportunistic, I would think.
Rakesh, I'm going to just build the framework and purely for the benefit of our viewers. Look, the headline understanding is that economy is doing well, capex has picked up, housing registrations are going higher. In general, there is a rural revival which is expected and which is anticipated. So the big picture argument, I think, for cement is rather rosy. And if I may throw in one more ingredient, that internationally this is one commodity which will not get affected and coal prices are down. So I've made the bullish scenario for you. Now for cement stock investors, what is the red light and what is the bear case? Is it valuation? Is it demand destruction? What could go wrong? Because what I've said is the right hand side, which is the optimistic Nikunj Dalmia, but I want to hear from you that what are the things which could go wrong if somebody is invested in cement?
No, Nikunj, you have perfectly laid out the possible scenario for a cement industry. And when you look at valuations are not really demanding as much, meaning if they are still trading well below 5-year averages. UltraTech used to trade at 19 times, 20 times, 5-year average. There's no reason why it should trade less because actually the runway is looking much better for growth. So there are hardly any red flags, I would say, in terms of not investing into cement sector. But as I was mentioning, that one has to brace for slightly weaker Q2 and Q3. Apart from this, I think we have yet to see, how Adani's play out, meaning how aggressive they will be. I think they will try to attain cost leadership and volume leadership. So there will be some volatility, some turbulence in the way cement industry operates. So, while the bigger picture is rosy and bullish, but there would be volatility on the way.
Thanks very much, Rakesh, for putting things into perspective, how we should be reading into all of the news and what's been keeping the cement sector abuzz.